Chapter 2.2, Analyzing Transactions into Debit and Credits. We're going to take a look at a lot of transactions. This is going to be a real fundamental lesson throughout the whole class. This is a very key lesson for you to make sure that you get right. Every transaction that we're going to read, and we're going to read a lot of them for the rest of this year, you need to answer 4 essential questions in order to get the entry correct. First one is, which accounts are affected? Is it cash? Is it accounts payable? Is it sales? Which accounts are affected? How is each account classified? Is it an asset? Is it a liability? Is it an owner's equity? How is each account classification changed? Did it increase? Did it decrease? And then how is each amount entered in the accounts? Is it a debit? Is it a credit? Well, we have our transactions here, 5 transactions. We're talking about Dora the Explorer. She has a marketing services. She's kind of a marketing guru. Take a look at our first transaction. But before we can break into our first transaction, we need to bring back those 4 questions. Which accounts are affected? How is each account classified? How is each classification changed? And then finally, how is each amount entered in the accounts? Well, let's take a look. March 1, we received cash from the owner as an investment. Well, my first account is going to be cash because it tells me I received cash. Cash, as we know, is an asset account, so that's how it's classified. Owner as an investment. Well, we know Dora is the owner, and an investment oftentimes increases their capital, so this account's going to be Dora the Explorer Capital Owner's Equity. For how is each classification changed? Well, we received cash, so do we have more or less cash? We have more cash. So, in order to enter that account, cash is an asset account. Assets are on the left-hand side of the accounting equation. All assets have a debit as their normal balance. In other words, all assets show an increase with a debit entry in their account of $1,000. Now, Dora the Explorer Capital Owner's Equity is a owner's equity account, which is on the far right-hand side of the accounting equation. Since it's on the right-hand side of the accounting equation, all owner's equity accounts will show an increase with a credit entry, or in other words, their normal balance is a credit with that. So therefore, the $1,000 cash, so the $1,000 that she invested will also go into Dora the Explorer Capital for $1,000. Now here's a quick little trick for you if you don't know it, and this is what makes T accounts wonderful. Let's just say you know that cash is $1,000 and it's a debit. Well, the only entry that it can be is that it has to be a credit. So you can figure it out that, you know what, Dora the Explorer, it has to be a credit because cash is a debit, and you can work it backwards that way. Or you can also remember that owner's equity is on the far right-hand side of the accounting equation, and everything on the right-hand side of the accounting equation, liabilities and owner's equity, are going to have credits to show increases. Everything on the left-hand side of the accounting equation, assets, are going to have debits to show increases. Let's do another one. Paid cash for insurance, $200. Well, what are my 2 accounts going to be? Well, we prepaid insurance, which is my asset account, and paid cash. So let's take a look at our prepaid insurance. What are we going to do with our prepaid insurance? Well, in this situation here, did our prepaid insurance, which is an asset account, did it go up or did it go down? It actually went up. So we're going to have an increase. How do we show an increase on an asset account, which is on the right-hand side of the accounting equation? That's right. Normal balance is a debit, so a $200 entry on the debit side to show an increase. And we paid cash. Cash is an asset account. To show a decrease in an asset account, it is a credit entry of $200. Bought supplies on account from All-Star Company. So we bought supplies. So what are my 2 accounts going to be? Well, my first account is going to be supplies, which is my asset account, because it says right there, I bought supplies. So supplies is going to be my account. On accounts. Remember, I bought something that I'm going to have a bill that I need to pay them later. So that means it's going to be an accounts payable account to All-Star Company, which is a liability. I'm not paying them yet, but I'm going to pay them in the future. So I have a liability. Supplies. Do I have more or less supplies? I have more supplies. $60 more in supplies. Therefore, it's a debit entry because assets are on the left-hand side of the accounting equation. And anything on the left-hand side of the accounting equation has a normal balance of a debit, or the increase is demonstrated by a debit entry. Accounts payable is a liability account. It's on the right-hand side of the accounting equation. Since it's on the right-hand side of the accounting equation, to show an increase, it's a credit, or the normal balance is a credit. Well, do we have more or less money that we owe them? Well, we have more money, so we need to show that increase with our credit entry of $60. Next transaction, paid cash for supplies. $125. So we paid cash. My two accounts are going to be, they're going to be two asset accounts actually. Supplies and cash are going to be my two accounts. Well, do I have more or less supplies? I actually have more supplies in this situation. So therefore, I'm going to make it a debit entry. And the reason it's a debit entry is because supplies are an asset account. They're on the left-hand side of the accounting equation. Any asset is going to have a normal balance of a debit, or in other words, any asset will show an increase in that account with a debit entry. Cash is also an asset account. Now, do I have more in this transaction? Do I have more or less cash? Actually, I have less cash. So, if debit is the increase side for an asset account, credit has to be the decrease side, which is $125. And finally, we paid cash on account to All-Star Company. So what's happening here in the March 3rd transaction, we bought supplies on account, and we said, we'll pay you in the future. Well, the future happens to be March 8th, and that's kind of the situation. So now we're paying them cash. Well, what are my two accounts that are going to happen? Well, paid cash, there's that cash word, has to be the cash account. And my other one is accounts payable All-Star Company. Now, this is a little tricky here because we have to really think about this. Okay, how is each account classified? We got that. And how is the classification changed? Okay, paid cash. Do we have more or less money? We actually have less money. So it's going, since it's an asset account, it's on the left-hand side of the accounting equation. The normal balance side is a debit, or the side that shows increase is a debit. Therefore, the side that shows decrease, and we paid cash, so we are decreasing our cash, $60, is a credit. Now, accounts payable, All-Star Company liability. Let's look at this transaction. This is tricky. Do we owe them more or less money? And the answer is less money, because we are paying off what we owe them in full. So, accounts payable, which is a liability, which is on the right-hand side of the accounting equation. Therefore, since it's on the right-hand side, all liabilities are going to have a normal balance, or an increase side of a credit. Therefore, if the credit side increases, how do we show that we have paid them or decreased our liability? And that's right, with a debit entry. Hope this helps. See you soon.